The Cantillon Effect is when governments or central banks print money, it doesn't go to everyone in the population equally. It goes to the insiders. It would be the individuals at the World Economic Forum. If you watch any of their videos, they've got this whole big push for a great reset, yes, where they're calling COVID a quote unquote opportunity. These are the insiders that are buddy-buddy with the people, the central bankers, who are printing the money. They're closest to it. So they get it, and it hasn't got out into the economy to create inflation in either consumer prices or assets. So their purchasing power, they get the maximum benefit from this money printing, where by the time it gets down to the average Joe, if it ever does, prices have gone up so much that their purchasing power is less than it was before they printed the money in the first place. I think it's all a game of probabilities. There's no certainties. But I think one probability could be if they start to ban cash, which I think they will, then if you look at the Banking for All Act, that's basically where we have accounts with the Federal Reserve. If we, the people, all have accounts with the Fed, then there's really no need for the banking system. There is no banking system. There is only one central bank. That's it. And so if we kind of take it to its logical conclusion, if the Fed has a balance sheet where basically they can take an infinite haircut, what that means is if the Fed loans you money and you don't pay it back, it doesn't matter. They don't have a profit and loss. So they can start to distribute money. You want to talk about the Cantillon Effect. They can start to distribute it not to whomever they want, but how they want. So instead of giving you a mortgage based on your credit score or your ability to repay the loan, they can do it based on your social score. But if you think about their incentive structure, they would be incentivized for the economy to do poorly and for the economy to actually collapse. They would be incentivized to promote things such as negative interest rates. Because what that does is that destroys the banking system or the economy. The more the economy is destroyed, the more money printing the central banks will do, therefore the richer the insiders get. I had a great chart the other day in one of my videos where I showed the Buffett indicator. And if you guys don't know, that's the market cap of the stock market compared to GDP, right? And the only time that GDP has ticked down was back in 2008, the GFC in this chart I had. And it went down just slightly, but of course the stock market went down by 50%. Now, it's the only time that I've ever seen in history where GDP has collapsed, but the stock market has skyrocketed.
Right.
It's gone the complete opposite direction. So there is no relationship whatsoever between the stock market and the real economy right now. Let's think about this. We all have a bank account, we'll just say B of A, Wells Fargo, whatever, and you get your bank statements every single month, and then you reconcile that with QuickBooks or whatever. So now if we had a bank account with the Fed, then the Federal Reserve or the government would see every single one of your transactions, especially if there was no cash whatsoever, right? So then every transaction had to go through the Fed or the government. So the amount of power that this would give them is basically unlimited. Yeah, and I'm not saying that this is happening so lose sleep, but I'm saying you got to start thinking about these things and think how these people and the system itself, what the incentives are to think of potential probabilities so you can make sure that you're not one of those victims we talked about. You can either be prepared or be a victim. It's your choice. The last business I had was a convention business where we do these large conventions 3 to 4 times a year. When I was thinking about that the other day when this whole thing hit with the virus, I'm like, boy, if I'd still be in that business, I'd really be struggling.
Yeah.
Right? And then I needed to figure out a way to invest my own money. So that's when I went down the Milton Friedman rabbit hole and Thomas Sowell. And then I started studying Jim Rogers and Mark Faber and Jim Rickards. And that kind of took me to philosophy that I wanted to buy things when they are cheap and sell them when they're expensive. Pretty straightforward. And so that took me to real estate in 2012 because it was extremely
timing was good,
cheap, and it went all the way down to its historic trend line. So I knew that was the time to get in. So I've been investing in real estate. Now it's a highly cyclical market, but now it's been going down for several years. And then now I've been doing it in South America. But I'm definitely a real estate guy at the core. But like where I live, I'm agnostic. If I see stocks or bonds around the world that are cheap, I'm happy to go in there and start kicking tires, that's for sure.
So what could somebody do today to prepare versus become a victim?
Well, a lot of things. If we're talking about from a financial standpoint, I think you have to look at commodities because they're extremely cheap right now, historically speaking. If you
Talking
look
about gold and silver right now.
and oil and uranium and copper, things like that, agriculture. If you look at commodities as a whole relative to stocks or financial assets, we're at an all-time low going all the way back to 1900. Yeah, well, as human beings, we're extremely irrational. And that's what makes us so poor investors. So we've got to try to eliminate that emotion from the equation and just look at the statistics and invest within a framework. But as far as what else people can do outside of investing and looking at things that are cheap and like commodities, that by the way will do extremely well in an inflationary environment if the Fed and the government keep creating money just out of thin air. But I think they can look around where they live and say, is my state going in the direction I want it to go? And if not, maybe I should look at a different state where they've got some ideas that are more aligned with what I think is right. They're going to print and create so much money to make them whole, and it trickles down, goes into inflation. It drives up consumer prices, especially if you have this move towards socialism, Marxism, or even anti-capitalism. You have to think through what that does. That reduces the amount of supply the amount of goods and services in the economy. That reduces supply. So if you have a reduced amount of supply and a greater amount of money chasing those goods and services, you have inflation going straight up. I think that you've got to own some gold. I know you talk about this all the time, but I think that's where gold and Bitcoin fit into the equation. I just look at them as two completely separate asset classes with two different purposes, right? I think that gold is there as an insurance policy just to protect your purchasing power. So I always say you buy gold not to get rich, but to stay rich. And then Bitcoin is more of a speculation, or you've got some asymmetry there, probably a lot more upside than you have downside. So that's kind of, and it's a unique. Those are unique assets in that they don't have any counterparty risk, and see that's very important when you're in the everything bubble. I think the main thing though is we've got to figure out a way to limit the ability for the central planners to create more currency. That's what it's about. And if you look at the gold guys, the Bitcoin guys, we're all on the same team here.
Right.
And that's limiting the central planners from creating all of those currency units.